Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Abasi. Good morning, Ayo. Good morning, Rufai. Good morning, all
Rotus.
our viewers out there. Let's get to business, shall we? Some Asian markets have bounced back from the massive sell-off that we saw yesterday. Remember, we went through the numbers. On Monday, the Nikkei 225, for instance, fell to a low we hadn't seen since Black Monday 1987. The Nikkei 225 in Japan bounced back up 10.3% or 10.23%, best numbers since 2008. The Kospi in Korea up by 3.55%. Over in Australia, the S&P ASX 200 climbing by 0.41%. You still saw the Hang Seng in the negative region, that's in Hong Kong, and the Shanghai Composite Index in China in the negative region as well. So not everyone is back on board, but Japan seeing a big jump. I think it's mostly people, buying the dip or suggesting that there may have been just a slight correction yesterday. Let's go over to the U.S. markets. Futures are pointing towards a positive opening, but yesterday was really ugly for the U.S. markets. Biggest two-day drop since the biggest drop we've seen in 2 years. So you saw the S&P 500 falling by about 3%, worst day since September of 2022. The tech-heavy NASDAQ, and that actually bled into what you saw in Hong Kong, because a lot of tech stocks are there, 3.4%. The Mag 7 is the Magnificent 7. So you've got your Alphabet, you've got your Tesla, you've got your Apple, you've got your Microsoft, you've got your Nvidia, and so on and so forth. Amazon as well. They collectively lost $600 billion in market capitalization yesterday. In fact, that was at the end of trading. At the beginning of trading, when U.S. markets opened, the market wipeout was $1 trillion. So they actually managed to earn some of that back as the day continued. Again, there's issues around whether Jerome Powell and the Federal Reserve are behind the curve. A lot of Federal Reserve officials, Ms. Daly from San Francisco and others, came out saying, look, one market dip does not a Fed rate cut make, or does not a Fed mistake make. So the representatives are saying that, listen, let's get more data and let's see what happens with respect to what's going to happen next with the Fed. Now, amid this market turmoil, where do you go? Where is the safe haven? Gold fell. Bitcoin was down. That's not even a safe haven. That's very volatile. It's the US dollar. Here is, I've talked about the dollar, about investing. I've said this over and over again to diversify your portfolios. Here is Mark Cudmore. He leads global macro analysis over at Bloomberg. Listen to what he had to say about safe havens.
The dollar in the short term. In 2008, it was a US-focused financial crisis. The whole US financial system was in jeopardy of going down, and yet the dollar soared. And that was despite the fact that dollar-yen was in free fall back then as well. Dollar works. At the height of financial panic, you do not turn to things like gold, or even less so to crypto. They are bets on the monetary policy response that follows. They are the bets that if it gets really bad in financial markets, that central banks will print money again. They are essentially hedges against fiat currency being devalued. But in the moment of financial panic, all these assets get sold off. Gold included, and crypto even more so, because it's a higher beta version of gold. So therefore, in the very short term, dollar's the only good haven.
So, maybe when folks hear from Uibo, they'll listen, but I've said this several times. Let's get to oil and gas. We've been talking oil and gas since yesterday. We're going to continue today. Very interesting. Look at Saudi Aramco. 93% owned by the Saudi government. Look at their Q2 numbers that just came out not too long ago, earlier this morning. Now, the numbers are reported in reals. It is 3.75 reals to $1 US. So we have to do a little bit of division to get this in dollars. Look at their revenues. $113 billion, 5.8% year-on-year growth. Operating profit coming in at $54.9 billion, slightly under the estimates of $55.27 billion. Net income for Saudi Aramco coming in at $28.3 billion. Estimates were for $28.42. Oil production through second quarter, about 9 million barrels per day. But look at how much the Saudi government is getting from their national oil company. They're getting an estimated, they're looking at an expectation of $124 billion in dividends for fiscal year 2024 from Saudi Aramco. Now, if you look at the earnings, most of it was on the upstream side. Oil prices supported that, although oil prices, you've seen them, waver a bit in the last month or so, but this is Q2. So, March, April, May, June. On the downstream side, with reference to refineries, margins are thin on that end. So it was really mostly pushed up by what we saw on the upstream side for Saudi Aramco. Oil and gas, we round up with the Dangote Industries Limited. We have what's a tale of two ratings. One from GCR, which came in late July, which is in today's This Day newspaper, Nigeria's Repair Record. And just last night, or rather just yesterday, from Fitch. Very divergent here, but both of them on their concerns, pointing to a number of things we're going to kick off with. Let's start with Fitch. Downgrading the Dangote Industry Limited, national long-term rating B+, prior was AA, senior unsecured debt rating B+, prior was AA. The ratings watch is negative. This is from their August 5th review, as I said. Now let's get to the concerns that Fitch raised. If you look at the Fitch concerns on Dangote Industries Limited, deterioration in liquidity position, lower than expected disposal proceeds, local currency depreciation, the devaluation of the currency weighing on the company. Again, as Adifemi already pointed out on the front page of today's This Day newspaper, the windfall tax, which again is predicated on what the banks made from devaluation. As I've said several times, if you're going to tax banks for what they made from devaluation, do you give a tax credit to MTN, Dangote, Nigerian breweries, and all the rest who had losses? Let's continue. We go to their key ratings drivers. Also, by the way, the concerns also include debt facilities maturing at the end of this year, at the end of this month, which are in US dollars. We go to their ratings drivers, refinancing of those that debt, the oil refinery ramp up, the fact that it's operating at about 50% capacity, and that needs to increase. The FX mismatch, you see the devaluation in parentheses. Basically, ramping up oil exports, or the refined fuel exports hasn't come in yet. So you're looking at Naira earnings versus dollar debt. And then the reduced NNPC stake. Have to point this out. If you go through the report, it talks about the fact that the NNPC initially had, I think 2021, took that 7.5% stake, was supposed to increase it to 12.5%. The whole talk around the 20% stake. Now, as a result of them not taking up that 12.5% stake, that now has to be raised elsewhere because it impacts funding backups for the company. So essentially, the Dangote refinery has to now essentially, shop around that 12.5% stake. So it tells you the ramifications of that particular move. And then you look at the cement profitability. They talk about margins being, waning in the cement field, also increased prices, and then fertilizer impacted by inadequate gas supply. Again, similar situation to the issues with crude being supplied to the refinery. Also, as far as fertilizer output, inadequate gas, and Nigeria is supposed to be a gas giant. So you can see the macro headwinds being impacting on this major $20 billion investment. So we go to GCR. They were on the other side of the coin. GCR was much more positive, much more bullish than Fitch. GCR, national long-term rating, maintained at AA+, short-term A1+. The outlook, they said evolving. Prior was stable from their July 23rd rating. Then their drivers, they are saying that the earnings growth from the refinery operations are a positive, and they are bullish on capacity being ramped up eventually on the refinery, provided that you've got crude supplies and so on and so forth coming in from Nigeria and then elsewhere. And then earnings expectations from the other verticals around the Dangote group. So your Dangote cement, your Dangote sugar, and so on and so forth. And then they also mentioned oil refining export proceeds. But they mentioned on concerns for GCR, similar to what Fitch raised. Currency devaluation, right? That's one. And then volatile energy costs. We went through Dangote cement. In fact, the Dangote refinery built its own power plant, right? And then you've also got Dangote cement, how much they spent also on power and so on and so forth. And then importation of gypsum for cement, raw sugar for Dangote sugar, and then crude because of the dollar impact there in that regard. So that is our updates for today.
Rotus, thank you so much. And this morning I say, God bless you. God bless you real good. And I'll set some records straight. You can see what...
I love you, man. You're my man.
I love you so much. I love you. You can see what Saudi Aramco is making compared to our own NNPC. NNPC has become a money borrowing machine. When Saudi Aramco is minting money, NNPC is using crude to borrow money. There's a pictorial on the front page of The Guardian this morning. Go and see how our crude is being shared. You will know the problems that are evident in our crude oil sector. So NNPC can't get its acts together. And that's why we need to be able to investigate NNPC if President Tinubu is really serious about revamping this country. Another point I want to make, Rotus, most of the points you made around what the problems are with the Dangote refinery, most of them are caused by government. How can a government make a pledge of investment and renege on his own investments? The same government that wants to eat off valuation money now through Forex from the banks is the same government that made a decision to destroy the currency by devaluing the currency and see the toll it has taken on businesses. This same government has not invested in gas. So availability of gas is a problem. This same government has not invested in conducive environment. When they said cement prospect go down, how would they not go down? When disposable income has fallen, purchasing power parity is also problematic. There's massive inflation. So you can see the myriads of problems and the challenges they have. And that's why I say God bless you. A story from Punch came out this morning saying that after President Tinubu said they should sell to Dangote refinery and other refineries in Naira, they've not still gotten the crude from NNPC.
All right, still on Dangote, interesting, and just looking at that, the Fitch ratings and the analysis of why they've been downgraded, you would understand the the call in recent times, especially for government support for businesses like Dangote. Obviously, they've mentioned things like the exchange rate, talked about being able to meet debt obligations, and these are some of the reasons why they've downgraded. But GCR, as you mentioned, is looking at it a bit more positively in terms of its outlook. But the truth is that at the end of the day, we see the role that government and providing an enabling environment plays in the success or lack of industries and businesses like Dangote Refinery. Also, of course, this then talks about to what extent would this affect investors, especially if they're having challenges with liquidity. It means that they need to be in a position to attract more investment. And the recent, I would use the word shenanigans, have been going on back and forth between NMDPRA and Dangote Refinery does not in any way help that. And that's why it was important to keep calling it out and ensuring that if businesses would survive, if businesses would thrive, then the government has a role to play. I thought you were going to talk about the ruling on Google yesterday. I don't know if you talked about it on your show yesterday with regards to monopoly and the fact that they're hoping to appeal that they rule that Google has unfair advantage in the search engine space by paying billions, up to $10 billion to companies like Apple, Samsung, Mozilla to have dominance in that space. And this might cut their influence and also their dominance in that space. But they say they'll appeal. So let's see how that works out.
The biggest story of the day is a story with which Financial Times leads its front page, which is the global market sell-off. Now we face a perfect storm. The concern about carry trade, I tried to explain that yesterday, what it means. Japan not being a place where you can go and take undue advantage. The US facing the possibility of a recession as a result of the jobs data that came out on Friday and the concerns about the Federal Reserve's slowness in cutting rates. Now, what we have seen is that the Asian markets overnight have improved. By this morning, Japan's Nikkei 225 and the topics, improved by about 10%. So some improvement. We've also seen some improvement with Brent crude, improving by 1.65%, ending at about $77.56 per barrel, and the U.S. Western Texas Intermediate, WTI, also improving. But what prevails generally is this global sell-off. Investors trying to manage their risks and investing in other places. And the place where we are seeing that most yesterday was in the United States, where the Dow Jones dropped. The Dow Industrial Average dropped by about 1,000%. And we also had, the other indexes also dropping, S&P 500 by about 500%. And mega cap for
1,000
tech
points.
stocks.
1,000 points.
Yeah, no, mega cap for tech stocks dropped by about $1 trillion. In fact, Nvidia alone lost up to about $300. So what you see is that, look, there's this global market sell-off. But what I call it when I describe it is the elevator phenomenon that we find in the global stock market. It goes up, it comes down, it goes up again. So, which is why perhaps the Chicago Federal Reserve president is saying nobody should panic, that the market will self-correct. So what we're facing now is the market correcting itself. And some analysts are saying this is in fact the best time to buy stocks in, in tech, irrespective of what has happened to Nvidia stocks and Apple also dropping by 4.8%. So that, in my view, is a big, story today. But on another side, in China, they have set up a civil affairs university where they are now awarding undergraduate degrees in marriage, how to taste a girl, how to marry a girl, how to organize a wedding. So, and they are admitting new students in September. They will start with 70 students. So the entire spectrum of how to marry a woman. I hope, some people in our Rice News will take advantage of this innovation by China, introducing an undergraduate program, civil affairs, how to marry a woman, and how to organize a wedding. Thank you very much, Rotus.